You've made it this far in life. You pay for streaming services you forgot about. You kept a plant alive for a whole week. And somehow, you've done all that without knowing what a mortgage is. Impressive. A little scary, but impressive. Today, I'm going to explain mortgages like you're 3 years old. By the end, you'll be able to explain it to your friends, and they will pretend to care. So, let's begin. You want to buy a house, a real house, with a door, windows, and a couch that will eventually learn the shape of your body. You see the price tag. It costs $1 bajillion. It's stupid money. You check your pockets. You find lint, a 3-year-old receipt, and maybe 20 bucks. This is not enough for a house. Not even close. But you know who does have $1 bajillion? The bank. The bank has so much money, it's basically swimming in it. A mortgage is just you walking up to the bank and saying, "Hello, Mr. Bank. You have lots of money. I have big dreams and an empty wallet. Can you please buy that house for me? I pinky promise I will pay you back." The bank, which is a business and not your friend, says, "Fine. We will buy the house for you, but you will pay us back for a very, very, very long time. And you will pay us back more money than we gave you." This is the most important part. A mortgage is a loan. The biggest, scariest loan you'll probably ever have. It's like when you were a kid and wanted the giant Lego castle. It cost $1,000. You had $5, so you asked your mom to buy it for you. And you gave her your allowance every week until you were basically 30. The bank is your mom. The house is the Lego castle. Your paycheck is your allowance. Now, let's break down the grown-up words. First word, principal. The principal is the actual amount the bank gives you to buy the house. If the house costs $330,000, the principal is $330,000. This is the part of the loan that actually pays for your house. It's the Lego castle itself. It is the only number that makes sense. Next word, interest. Interest is the extra money you pay the bank. It's their thank you for letting us profit from your dreams fee. The bank rents out money. You pay the rental fee back to mom and the Lego castle. Mom says, "I'll buy you the castle, but for every month it takes you to pay me back, you owe me 1 cookie." That cookie is the interest. At first, 1 cookie a month seems fine, but you pay her back for 30 years. That is 360 cookies. You're not just buying a Lego castle. You're supplying your mom's cookie addiction for 3 decades. And the bank. They love cookies. They want lots of cookies. In fact, for the first few years, almost all your monthly payment goes toward the cookies, not the castle. It is depressing. Do not think about it too long. Now, the down payment. Before the bank agrees to this whole thing, they want to know you're serious. They want you to put some of your own money down. Back to mom. Before she buys the Lego castle, she says, "Show me what's in your piggy bank." You shake it. You have $100. You give her that. Now she only has to lend you $900 instead of the full $1,000. The bigger your down payment, the less money you borrow. Less borrowed money means fewer cookies. Always aim to give the bank fewer cookies. They have plenty. Next, the horrible word, amortization. It sounds scary, but it just means the payment plan. It is a long chart that shows every payment for 15 or 30 years. It tells you how much goes to the castle and how much goes to the cookies. A 30-year loan is a very long time. When you're 3, that's 10 lifetimes. You'll be a completely different person by then, with gray hair and strong opinions about lawn care. When you look at the chart, your first payment might be 90% cookies and 10% castle. But slowly, very slowly, the scale changes. You eventually pay more for the castle and less for cookies. Now, escrow. This one confuses everyone. But it's simple. The bank does not trust you. You have to pay property taxes and homeowners insurance. If you forget, the government can take your house, or your house could burn down, and then the bank loses its castle too. So the bank says, "Give us a little extra money each month. We will hold it in a special jar called escrow, and we will pay your taxes and insurance for you." It's forced responsibility. Just like your mom saying, you need to pay for shelf space and dog protection for your Lego castle. I know you'll spend the money on candy. Give it to me instead. I will pay the bills. Finally, what happens if you stop paying? If you stop giving your mom your allowance? She walks into your room and takes the Lego castle back. This is foreclosure. The bank takes your house. You lose the house and all the money you put into it. Your credit gets destroyed. The bank sells the house to someone else. They do not care. It's business. So, a mortgage is just a pinky promise with a bank. You promise to pay for a long time. So they buy you a house you couldn't afford. You pay for the house. You pay extra for their cookies. You pay into the escrow jar, so you don't forget your chores. And if you break your promise, they take the house back. See? Pretty simple. Congratulations. You are now officially smarter than you were when this video started. You get it.